Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, February 1st, Thursday, the day after FOMC. As you know, the Federal Reserve held the rates and said really important things regarding the interest rate cuts path that markets are pricing in, and they are pretty hawkish. And we are going to analyze Jerome Powell's statements in just a minute. But first, let me just explain today's data. Initial jobless claims came higher than expected. We were expecting 212, we got 224. And continued jobless claims came also way higher than the previous one and also expected. The big data today was ISM manufacturing PMI and came higher than expected. The S&P Global Manufacturing PMI came above 50. The ISM employment came higher than expected. Manufacturing prices and new orders came way hotter than expected. So markets, it's really good news on the economy, is good news for the market. This is the current status for the market. So now that we covered that, let's just analyze what happened yesterday. Let me just show you. Yesterday we got, let me just take a pencil, the laser point. So Fed Powell said our policy rate is likely at its peak. It will likely be appropriate to begin reducing rates sometime this year. If the economy evolves as expected, we will dial back the policy rate. Those are good news. They are acknowledging that there might be cut rates this year, most probably. I am prepared to maintain the current policy rate for longer if needed. They left the door open in case inflation spikes again. And in order for markets to really have positive, good earnings, positive mentality, they confirmed that we had very strong growth last year. We don't think we necessarily need to see weaker growth for inflation to come down. So that's a message for the market. If the big tech earnings are happening, that doesn't mean that growth means higher rates. And then it started to really pull the rug. Fed Powell said almost everyone on the committee believes it will be appropriate to reduce rates. We are not declaring victory. We want to settle out at 2%, but this last phrase is what spiked the move to the downside. We do not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%. But based on the meeting today, I don't think likely we will have a rate cut in March. After saying that, the market basically flashed. And we are going to see that in the charts in just a minute, because basically this was the move yesterday on the 50-minute. Let's just put the 1 minute. Let me show you what happened yesterday, because it was a pretty... So this was basically what happened yesterday. And as you can see, sorry, it's here. So as you can see, we push higher, and then once the message on the press conference, Powell pulled the rug and just moved the market lower. So if we check the 30-minute chart, we are now in a really tricky situation, because we had this fair value gap that it's still holding. Look at these moves. This liquidity taken into the move down was a beautiful manipulation move into the rug pull, late spike into the afternoon. And during overnight today, I was pretty bearish, but as you know, sometimes the market just changed their mind. So look at this move. Liquidity on pre-market, taken out, pre-market low taken, and we start pushing higher. This is the order block that we got here, was the first sign of, okay, maybe we want, let's just change into the 15-minute. This is the 15-minute order block before the move down and then the push higher. We established this range right below the 15 fair value gap inverse that we got yesterday after the rug pull. We established here, and today is just a pretty choppy day because I think market is trying to move higher due to investors trying to buy the dip, but the small time frame is getting stubborn. Look at this move: low, high, low, high, low, and then accumulation higher. And now we are reading news that there might be a ceasefire, a pact, a deal between Hamas and Israel, and it's really affecting the market and chopping around. And basically, we are at a point in which yesterday we took the 15-minute, we are now invalidating, and there's a lot of liquidity to the upside. This move might happen. Look at the S&Ps. It's also trying to squeeze higher after big rejection lower. And this market is just super dangerous. Into the rug pull yesterday, remember that this was what I was watching. All this low resistance liquidity got taken out yesterday. But I mean, the market is still wanting to trust into the rate cut path. The small caps are really pushing higher. Nvidia is just crazy bullish. Look at the small caps. Look at Nvidia. Look at Google is the only one that it's not willing today to go with the market, but Microsoft is pretty bullish. Meta is pretty bullish. And dollar is just being annihilated. The treasuries are now super bullish. Also, small caps are pushing, and the Nasdaq is just chopping around. This was the only take that I took today. So we were chopping. I was waiting for the manipulation move higher. Manipulation move, fair value gap being respected here and here. This is the order block. And then I took this order block into this liquidity. That was the stop up here, 4.62, 9 points of risk for 42,800 bucks with one contract. And then look at that. Push, rejection of the fair value gap, but still they're not stopping. So what is happening today? I got this manipulation move projected to the downside. The short was really beautiful. This was a smart money move, but it didn't get continuation to the downside. I was expecting to really crash everyone's, and it's just here. It's just here on this order block, trying to be between this inverse fair value gap and this order block. They are trying to push lower, but it's not falling. There's a negative cumulative delta today on the S&Ps pretty hard, and the S&Ps are not willing to go down. And that's something that happens when higher time frames, big investors, big money are flowing into the market. And after yesterday's hard move, today being this bullish, oh boy, this is super dangerous, super dangerous. So I'm really willing to wait today to see the close. That would be super interesting, but don't discount anything. Anything can happen. But my recommendation is just to wait and see. After yesterday's big move to the downside, market is not willing to accept what Jerome Powell said, and it's just shopping around. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like. Subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recap. I appreciate your time as always. Remember that today is not an easy day. Apple and Amazon report earnings after the bell. Be really careful. And remember that discipline, patience, and risk management are the key for your success. Stay safe, everyone, and see you tomorrow.